But I get something monumental. Very, very important, so we're going to get right into it. And this will be in Saturday's Forecaster in the first paragraph. It's one of the most important pieces that I've put together ever. The following information might be the most important we have ever published. One of our intelligence sources, highly placed in banking circles, tells us that on 1/1/2010, all banks that have received TARP funds must give the Fed a rundown on where they are and how much they can pay back. The TARP recipients were told to restrict any commercial lending of any kind to about 25% of what people ask for. In other words, if you ask for $100,000, you've got to come up with $50,000 yourself in cash and collateral of an additional $75,000. So the loan would be protected 125%. And so you're getting 50 grand in cash, but you're laid out for 125 grand if you can't pay back. And those are the new rules as of January the 1st. I was told by my source, and believe me, this is so important, and I'm glad you're running this program again on Friday. And this is the first time I've announced this, because I just got this information from this source today. There are not 552 banks in danger. There are 2,035 banks in imminent danger of collapse. So that means next year we're probably going to get 2,500 to 3,000 failures. And the cost to bail out those 2,000 banks, 2,035, would be about $800 billion to $1 trillion. The Fed wants to close as many banks as possible. And this is the consolidation process that they're engaging in to move forward to world government. This is what they're up to. The FDIC has already secretly gotten $80 billion from the Treasury. And the Treasury is preparing to close or collapse the FDIC by next September or by year end. So no accounts will be insured. And of course, money market accounts they're not guaranteeing anymore after September the 18th, so that's history. Now, this is the dilemma that the Fed is in as it was explained to me. The Fed needs to pull $1.5 trillion out of the system by June. If they do that, they stand the chance of collapsing the economy. If they don't do that, we'll have hyperinflation. And that is why they need banks to set up plans for TARP payback so they can get some liquidity. Maybe they get 300 or 400 billion back during the year. Let's say 500 billion. That still leaves them with $1 trillion they got to find. And I hope you can follow all this, because this is written. You know, I talked on the phone to this party, and I scribbled this down. I haven't formally written this thing yet, so you got to bear with me. The bankers are being told at the very, very top level, and this guy is the top guy that I talked to, they were told to find space for new currency. The dollar will be devalued by the end of 2010. I've been talking a year and a half, maybe 2.5 years. This is official. Now I'm going to get more information in about 3 weeks. And I'll be back to you with that. They believe commercial real estate next year is going to implode. There's a company called Inland American, which is a private corporation. I don't know anything about them. But he said they have been buying up properties, prime properties, for 40 cents on the dollar. They're going to stop until next March or April so they can buy them up at 30 cents. They also told me that the Feds and banking, Wall Street, are 100% expecting a complete crash and destruction of the bond market, especially municipal bonds. They expect municipal defaults to skyrocket in 2010. Look for public services to be reduced dramatically, leading to higher crime rates and so forth. One other note, over 50% of the homes in hard-hit areas like Las Vegas are worth less than what the home was mortgaged for. 1 in 4 homeowners in the USA are now underwater on their homes. Now, I'm going to cover this, and I got another thing to tell you. How do you protect yourself? You've got to be in gold and silver coins. If you got a lot of money and you want to play the gold and silver shares, they're going to go up exponentially. And it's up to how much risk you want to assume. You must be out of dollars. You must be out of every CD. I don't care whether there's a penalty to get out of it, get out of it. Every life insurance policy with cash value, every annuity, anything that's denominated in the United States dollars. For those of you who are enormously wealthy, and there are listeners on this program who are, if you refuse to go 100% into gold and silver related assets, the only alternative you have, and they will go down versus gold, is the Canadian and Swiss treasuries. And that's it. Don't buy any properties. Don't do anything until we see which way this thing is going to go. Incidentally,